Mortgage rates are falling and home buying demand is up. This is crazy. I thought it would be somewhere else. I thought prices were going to drop a little faster. I thought interest rates were going to remain higher, and the optimism of people wanting to buy right now, I just want to show you what's going on. And I'm going to go right into an article. Home buying demand sitting near highest level since early spring as mortgage rates fall. Yes, they've been falling. In fact, mortgage rates are declining after last week's cooler than expected jobs report made it clear the Fed will cut interest rates again this month. I think sometimes we forget that. Now, let me just click on this to show you where this would go. 227,000 jobs were created in November, mostly in line with the expectation of 215,000 jobs. When jobs are down, and I think this is the piece that we forget, when unemployment is an issue, you start seeing rates come down a little bit because you have it tied to confidence, the confidence that maybe the economy isn't doing as well as we thought. And when that happens, right, the mortgage rates start coming down. Mortgage rates, because they've been still in the high sixes, it's caused a challenge for a year and a half or so, but people are finally getting used to it. Read this with me. That I thought was a really good paragraph. Declining mortgage rates are one reason home buyers are hitting the pavement, but there are two more impactful reasons demand is improving, and this is a good thing. The financial uncertainty surrounding the presidential election has passed. Yeah, number one, right? We talked about it last time. And buyers have accepted the fact that mortgage rates are likely to remain above 6% for the foreseeable future. Now, you're looking at this and saying, well, where are rates actually going to be when we hit 2025? Well, I've got a great little graphic for you. You look at this and you take a look at the forecast for 2025 as far as rates. You got Redfin at 6.8, Capital Economics 6.75, Hunter Housing Economics 6.6, CoreLogic, and they've got a lot of data, a 6.5, Wells Fargo 6.4, and then it goes down and then you see NAR, the National Association of Realtors, comes in at 5.8. That's a big difference, a whole percentage point. Right? And it makes a lot of difference in your payments. So when you're looking at this and saying, well, where are we really going to be? I think you have to take a look at where the rates are right now and how are we doing with the economy? And that really is hard to tell. So I would say based on that, based on unemployment, based on the optimism of everyone coming in and saying it looks like things are going to get a little better, I would say we end up somewhere in the low sixes. Now, take a look at this. On the selling side, new listings are up 7.9%. That means sellers are getting comfortable with the current rates as well. And look at the daily average 30-year fix, 6.75, down from 7.08 3 weeks earlier. That's a pretty big jump. And if we scroll down a little bit more, it's up 7 days from a week before. That means there's more on the market. There's less people buying homes. And if we take a look at this on a 6.75, if we look at this and if we scroll in and take a look at November 6th, we were at 7.13, and that's probably the highest it's been since, what are we looking at, about July 3rd, July 4th, maybe. And if we go to where we're at from 7.13 to 6.75, we had a massive dip, right, which was amazing in September. I want to show you three different stats. Median sale price, just the price that people are putting up their homes for, right? Miami's up, Michigan's up, Milwaukee, Cleveland, West Palm Beach, and Tampa, Florida's down. Interesting that you have Florida, and Florida. A tale of two cities in a state, which is crazy, similar to California, right? You go into pending sales, which I think are the most important piece to determining where our market is headed. And remember, real estate is regional, but if we take a look at these numbers, we can start seeing what's actually moving. What markets are hotter, which ones aren't. And then I'll show you at the end the new listing area, and we'll dive into some deeper data there. But you look at San Jose, That's where you're finding most of the homes moving because they're under contract. That means somebody put in an offer and it got accepted, right? And then look at LA, 14.9%. Remember COVID-ish time? And we were looking at California just being a dump, people leaving. And people are like, wow, is California going to make it? And all of a sudden it turns around because look at the numbers here. And this is why I want you to pay attention regionally. The places people move to are now suffering a little bit more. Houston, Texas, people moved there during COVID. Miami, down 6% for pending sales. Orlando, down a little bit. West Palm Beach, down a little bit. And then look at the other areas here, though. You've got Jacksonville, which is up too. But 3 out of these pending sales that are high, 3 out of these 5 are in California. And that to me is telling a story of where the market is moving. Now you go here, you're like, well, okay, great. Now that we know where the market's moving, where are we seeing most of the listings? Most people saying, well, I feel comfortable putting my home on the market, or maybe I'm missing the market and I need to put it up for sale. Now, this is where I want to take you. Let's go to San Francisco because San Francisco was hit hard during COVID. We take a look at the stats here, and according to Altos Research, it looks like overall it's still a strong seller's market. And we look at the average price point. This tells a story of where we're at. Median price, $1,695,000. Median days on market. It's gone significantly up in a very short time, going from about, what is a low here? 14 days on market as of September 20th. And what is this? Almost 3 months later, gone up to 56 days on market. And then let's take a look at price decreases. Price decreases tend to go up when things aren't selling, right? And look, it's up from the low of October, let's see if it was lower. Yeah, October 4th up to December 6th, 31%. 31% of homes are now asking for a price decrease. It's growing. Let's take a look now at Columbus, Ohio, because if we take a look over here, it said number 2, Columbus, Ohio, 17.6%. And that looks like it's a seller's market as well. And we take a look at the median price point, significantly lower, and it's gone down a little bit. Look at that. Median list price. It's not the sale price, it's the list price. People putting their homes on the market for less and less. That means there's a lot more competition in there. And look at median days on market, slowly creeping up as well. And then let's take a look at price decreases. It's remained steadily in the 50s. Look at this, 50s. So I would say this market might have more inventory coming up. And then let's go to the third city here, Seattle. I wanted to take a look at Seattle, so I'm doing this one for me, even though I'm in LA. Seller's market, okay? And let's take a look at some stats. Median list price, it's gone down since October, right? Now you got median days on market. It's gone up. Look at this. We go to August 23rd, 35 days on market. Usually summers are hot, right? And homes sell fast. Now it's getting a little slower. But think of also what we looked at earlier, right? Just right here. New listings. Where are lots of properties coming in on, right? Well, 16.9% new listings. And then things aren't moving. Interesting. That means prices could come down here. And look, price decrease, right? You're going into the 50s like we had in Columbus, Ohio. And remember that very first stat that I showed you? And we take a look at this. On the selling side, new listings are up 7.9% year over year. The biggest increase since June, except for the, 4 weeks ending in November 24th. Look what this says right here, though. The highlighted area. Let's highlight it green. Sellers are becoming more active for similar reasons as buyers. Additionally, some sellers are listing in hopes of taking advantage of the increased demand we've seen over the last several weeks. We're seeing people get more comfortable with the rates, we're seeing the rates drop a little bit. That's moving the needle for some of these buyers and saying, okay, now that the elections are done, let's jump into this and see how it goes because we're optimistic. But what we haven't seen before is now all these sellers getting comfortable. And that's why that number for me, 7.9% year over year, that's important. We've got to pay attention to that as to where it's happening in the nation. Because as soon as the inventory starts passing 6 months worth of inventory, now all of a sudden it's like, wait a second, is it going to creep up to 7 or 8 months worth of inventory? And then it turns to a buyer's market, right? Because right now you looked at those stats, shows that it's still a seller's market. So pay attention for that, and we'll talk again.